Welcome to The How of Business with David Begin and Henry Lopez, the podcast that offers practical advice and tips on how to run and grow your small business. The How of Business helps aspiring entrepreneurs and small business owners achieve their definition of success and overcome challenges that get in their way. This podcast series focuses on the everyday common business issues, challenges, and opportunities that face the small business owner. So here now are your hosts of The How of Business, David and Henry.
Welcome to this episode. This is Henry Lopez, and my guest today is Cody. Craig, welcome to the show.
Thank you very much for having me.
Well, we're excited to have Craig. Craig is a certified tax coach, certified public accountant, or a CPA, a business owner, and a former New York City police officer with 17 years experience on the force. In addition to being a CPA for the past 15 years, he's also a certified tax coach. And as a certified tax coach, Craig belongs to a select group of tax practitioners throughout the country who undergo extensive training and continuing education on various tax planning techniques and strategies to become and remain, as they call, certified in this specific area of practice. With this organization, Craig has co-authored an Amazon best-selling book entitled Secrets of a Tax-Free Life. And so in this episode, Craig's going to share with us his very interesting entrepreneurial journey, how he got to where he is today, and then lots of tips and advice and things for you to think about as it relates to taxes, avoiding our taxes as in a legal and fair way, and what are some of those practices and things to consider in our small businesses. Craig lives in the New York City area, over in Long Island, actually. And so, Cody, once again, welcome to the show.
Glad to be here.
All right, so let's get started kind of at the beginning of the journey where we always start, which is back in school. I believe you studied economics. Is that right?
Yes, my first foray into college was as an economics major, and I wanted to work on Wall Street.
Interesting. So then what changed your path there and ended up going into the police force?
I guess at some point while I was in college, I started considering following in my dad's footsteps. I was kind of coming from an area where, everybody kind of went into civil service. And after my third year, I made the decision to go for it.
And that was that something your parents wanted you to do, or would they have rathered you gone on to a different career? What was your dad's thoughts?
Oh, my parents definitely would have rather that I would have gone on to another career. As my son is a New York City police officer, third generation, wow. And we also would have rather him go on to another career also.
Yeah. So 17 years you were at it. Did you stay for 17 years? Because obviously that's a type of position where seniority matters and you want to retire perhaps, or did you enjoy it? Just tell me about the experience a little bit.
Oh, it was a great experience. I worked with a great bunch of people over the years. I rose to the rank of a lieutenant. I got to do some very interesting things. And at some point I lost most of the hearing in my right ear, and had to make a decision to stick around or to leave. And at that point, I had already had the itch. I had been in a bureaucracy. Life is not always fair. And I wanted to have a little bit more control over my own destiny.
Yeah. When you think back now, because you've been out of it sort of 15 years or so, thereabouts, if I got the numbers right, what do you think you took away the most from that experience that applies to running a small business?
How to communicate. I had to communicate with people across so many different backgrounds and ethnicities. So you learn to be a very good communicator, and I think that was a big takeaway for me.
Yeah, that makes sense. You had to lead people who didn't necessarily even report to you, and kind of have that ability to communicate to peers as well as people under you, above you, well, throughout the whole range, right? Even politicians in some cases, I suspect.
And the general public.
And the general public, yeah, very good. Good point. Excellent, so wonderful. So where did this itch then develop, I think, while you were still in the force, to go back to the accounting route and become a CPA?
Yes, well, like I said, life isn't always fair, and I was a sergeant at the time, and I was working inside the intelligence division, and I had a boss at the time that, was not particularly fair, and I wanted to have a little bit more control over my destiny. So I said it's time to go back to school. You kind of, at the time, it was a 20-year retirement. So I went back to school. At the time, I had 3 kids, and my wife was also in school, but we just made it work. And I was lucky enough to do something that I really enjoyed. So I had a good 17-year run, and now I'm on my second 17-year run.
That's right. What is it about accounting that you like, that you enjoy?
Well, what I really like is, people always say, how do you go from, chasing perps down the street to doing, accounting and bookkeeping? And, what we do is we do proactive tax planning. And when I sit down with somebody and I show them how to save $15,000, $20,000, $50,000 a year in taxes, that's exciting.
Yeah, it's different than the typical accounting work where it's the same thing over and over. Every time you work with a new client, I got to think there's a slightly different variant of how you can help them save money.
Exactly. So every client, we deal with starts with a tax plan, and you find ways, legal ways, to save them money, help them keep more of what they make.
Yeah. So you went back to school while you were still a police officer. Actually, you were probably at the sergeant, lieutenant ranks or approaching that. And then you got your CPA as well, right?
No, because in New York State, you have to have 2 years of full-time experience.
Oh, interesting. Okay, so you had to go work for a firm for a period of time.
So
then go do that.
Right. When I retired, I went to work for a firm, and I got my experience, and I passed the CPA exam, and then you get your license.
And you had in mind that as soon as you could, you would open your own firm?
Yes. Yes. I say that with a big smile on my face.
Yeah, no, I can imagine, right? I mean, that was the motivator in part, was to have control and to have some more control over your own destiny. So working at another firm, while I'm sure it was great learning experience, you couldn't wait to get on your own, I suspect.
Correct. Great experience, great people, but, there's nothing like having your own business.
So in 2000, you started Craig, Cody and Company. Was it initially a traditional CPA firm, or was it a tax advisory firm from the start?
It was initially, a part-time traditional firm as I worked, for the other firm. And then about 6 years ago, we actually made the change over to, the tax planning, which really was something that came out of estate planning. Estate planning, a number of years ago, they made the changes, and basically you had to be a couple with, over $10 million in assets. So that kind of shrank the pool. And we started looking what we had done for those clients and the tax savings they were having, and came up with tax planning and found a group that does exactly that. So we get continuous training on different techniques that are available. And here we are today.
Yeah, that's fantastic. All right, so we'll start to dive into some of these topics on tax strategies. But before we do, I just want to kind of give a quick disclaimer. I'm not a CPA. I'm not an attorney. Craig is a CPA, but he may not be your CPA. So everything that we're talking about today for you to give some thought to, and to consider and to discuss with your advisors, with your professionals. And so I definitely always suggest that anything we discuss today that you think you want to apply in your business, that you first consult with your tax professional or attorney or both before you implement it. So, having given that disclaimer, let's jump into it if we could, Craig. Let's start, I think, with what do you see as the difference between a traditional CPA that I might have and have had in my business that I talk to once a year when it's tax preparation time versus a tax advisor or tax planner, and what are some of the key differences?
The big difference is most CPAs and tax advisors are very good at what they do. They put the right numbers in the right boxes, okay? But they are recording history instead of making history. If you communicate with your tax advisor in March or April, there's not a whole lot he can do for you other than maybe a retirement plan. We communicate with our clients throughout the year, and that's the big difference. We're proactive versus reactive.
Essentially, part of that is what I found in dealing with CPAs traditionally is when you do communicate with them at the beginning of the year to give them your stuff, and you're trying to get it as quickly as possible so you can get it in time. That CPA barely has the time to even reply to an email because they're heads down preparing returns, right? It's the absolutely worst time to now try to get some tax advice because they're busy preparing the returns.
Oh, yes. For most firms, that's the way it is. And that's very bad for the client because, that's when you're looking for your advice, but you should be getting that advice throughout the year. So that's why we work with our clients throughout the year, and we communicate with them and we answer those questions and we guide them in the right direction.
So when you get a new client, how do you typically begin to engage with them? What's the process at a high level?
So at a high level, the process is somebody will come to us. They will send us their personal returns, their business returns. We'll analyze them. We'll look for missed opportunities and deductions. We'll let them know what we've found. We'll see if they want to engage us in the tax plan. The tax plan will lay everything out as far as what they need to do and how much money they will save on an annual basis. And then at some point, they may ask to engage us for ongoing work, and we let them know that we work with all our clients throughout the year. We don't just work with clients now. We have to work with you throughout the year.
So what's an example you've seen? So I come to you, let's say I would have come to you last spring, and we engaged initially. We put together a tax plan. What are the things that could happen in a business, the changes that could occur that would trigger the need for us to have a conversation again? I mean, I realize you have scheduled conversations, but give me an example of the things that can change in a business that should come into tax planning.
You want to buy some equipment. Okay. Maybe you're starting to care for an adult relative. How do we make those expenses tax deductible legally? Different life events that happen they may not just necessarily happen inside your business. They could happen outside your business. So by communicating, they'll come to us. I'm looking to purchase a piece of equipment. I'm looking to purchase a vehicle. I'm looking to lease new space. I'm looking to hire new people. There could be a lot of different things. Or I need new teeth. My wife, she needs to have all new cosmetic dentistry done. Can I deduct that? And typically we'd say, well, typically, no, you can't deduct it. But if we set up a medical expense reimbursement plan, which is under Code Section 105, we can make that deductible, and we show them what they need to do in order to make that expense deductible. And if they came to us in January the following year, there's nothing we could do about that.
Right. Something you can do retroactively, or very little you can do.
Yes.
So on all of this, and I've heard you talk to this before on other interviews and other materials online, when it comes to all of these deductions and even our regular deductions, documentation, retention of tax records, talk to us about that and what you advise to your clients on document retention and documentation overall on all of these deductions that we may or may not take.
Well, we advise all our clients to save their documents for 7 years after we file a return. As far as documentation, which is really the key, you need to make sure you cross those T's and dot those I's, and that's what we help them do. Because I can tell you to do A, B, and C, and it's just as good as the piece of paper it's written on. But when we write it down and we follow up with you, and you have somebody in our office that's making sure that, okay, this is what's going on, we need that for the file. That's how the documentation occurs.
So let me give you a couple of examples that are one that's common and one that's not so much. But meals, so T&E, but specifically meals, which are deducted differently. What is the IRS looking for in the way of documentation there if I were to get audited?
Well, you should obviously have the receipt. You should have the person that you met with, and you should have what was the reason of the meeting. And these days, with everybody having a smartphone, it's very simple.
How is that?
Well, everyone has a smartphone, so they have their calendar. You could print out your calendar, and then you could go back with your receipts and see what you did. Or you could take that receipt, write on it, Johnny Jones, purchase of a new piece of equipment. So you make sure you document some type of business purpose for that meeting.
Yeah.
And
What I
then
usually do is right there at the end of the meal, if time permits, is I'll flip it over and write on the receipt who was there and briefly what was discussed. Is that sufficient documentation?
that is sufficient.
Okay. All right. The other thing you talk about often, and you kind of alluded to a little bit, is being creative, although very legal, to write off employing your children. In that case, what do we need to document there?
Well, you need to have a timesheet. They should be signing in and signing out and documenting what they're doing. So we typically would use that strategy to, the tax court has ruled children can do this as young as 7. I like to use kids that are about 12 and older. But, the child should sign in, he should sign out, and you should really have a documented procedure for what he's actually doing. And then you pay the child, and then what you do is the money goes into his account, and then let's just say he's going to a private school. And then you could have the private school take the money out of his bank account to pay the tuition. So now the business got a tax deduction, and everything, the school got paid, and you basically saved, maybe 30%, 40%, depending on what your tax bracket is.
And these are all the creative things that we can do legally, and that's been done before. It's just that usually most CPAs don't provide that type of proactive advice. That's not what they do.
Correct. And the key is documentation. You can't decide, oh, well, my son worked, but I paid the money out of my account. No, it doesn't work that way. So if you're really are being proactive and you're communicating with us, we make sure it's done the correct way.
Yeah, it seems to me that if you have poor record keeping altogether and you're terrible about doing that, and it's all, in boxes here and places there, you're really going to get yourself into even a worse potential bind by taking these tax advantages, because then you have no documentation or poor documentation, and that could end up hurting you significantly, right?
Exactly. And that's why, the clients that we work with, we make sure we get that documentation. We don't leave it up to chance.
Okay.
I like to tell people, you make your money doing whatever your business is. It should not be bookkeeping. It should not be tax compliance.
Is this type of tax advice, Craig, do you think affordable to the typical very small business owner?
Yes, it's affordable if somebody is a small business owner and they're paying taxes. If you're not paying taxes, it's not affordable. But our typical ROI on a tax plan is about 4 to 5 times your first year investment in the first year.
Yeah, because you're going to find so many opportunities right off the bat that I'll make it back 4 or 5 times what I pay you in that first year.
Exactly. It's kind of instant gratification.
Yeah. Okay, I want to talk about common mistakes you make, but I know one of the big ones is entity selection, whether it's an LLC or an S Corp or C Corp. I get that, and a lot of people struggle with that, but I want to go beyond that. Besides entity selection, which is a big one, what else do you see as common mistakes that people make where they end up then, as a result, paying more taxes than they need to be paying?
Well, not taking a salary that is correct. Let's put it that way.
It's reasonable or typical.
Exactly. Reasonable compensation. I was having a little bit of a senior moment there.
Why do you want to do that? Because if I take a salary, now I'm paying taxes on that, but why is that advantageous?
Well, the IRS says you have to pay yourself reasonable compensation.
If it's a C or an S Corp, correct?
Correct. And that reasonable compensation is subject to self-employment tax, which is about 15%. So if you're taking too much, you're overpaying your self-employment tax.
Right.
If you're taking too little, the IRS is going to come knocking on your door eventually. So that's why it's important to make sure the compensation is reasonable.
So I've had to struggle with that in the past, and it's such a hard thing because what is reasonable, right? And so usually all I've been able to do is take my CPA's guidance on what's reasonable, but I don't know that in the past that CPA has done any analysis on what's reasonable in the industry. He or she was probably just comparing it to their other clients, right? So how do you arrive at what's reasonable in the way of a salary for the operators?
So the IRS issues a number of different bulletins that are out there, and they also issue data, and you could get into the data, and you can basically calculate based on IRS statistics what somebody in a certain job function is making.
Okay.
And we can use that to basically come up with reasonable compensation. We could also do a compensation study, which costs a little bit more money. So most people aren't willing to do that. So that's one of the things we do. We base it on our experience. Okay, what are the different job functions you're doing? Okay, what would you be paying somebody else to do that? And that's how we come up with reasonable compensation. And then we check that against the guidelines that we get from the IRS as far as the total information.
Okay, so entity choice, which we skipped over, I know is a big one. Paying yourself the least amount but legal salary in the case of a corporation. What else do you see that's a common mistake that small business owners make that they're overpaying their taxes on?
Not taking all the deductions that they're entitled to. People that don't accurately check or track their expenses when they come to us, and we actually go through the bank statements and we pull out all the legitimate expenses. It's basically, we find typically that they've been understating their expenses in the past. So by correctly tracking your expenses, typically we have found that you're going to generate larger deductions. That's one thing. Then we have the home office deduction that people tend to want to stay away from for some reason or another. We talk about documentation. We talk about what the IRS requires. We talk about accountability plans. Say there's two partners and maybe one likes to drive a Honda Civic and one likes to drive a Maserati. How do you even that out? So those are common mistakes. And then we look at late elections. Sometimes you have the opportunity to make a late election that can save you some significant tax dollars.
And what are you talking about there with late elections?
Sometimes you'll have an LLC, and it may be advantageous to have it taxed as an S corporation.
Okay.
And, people don't realize that sometimes the IRS will allow a late election if you meet certain circumstances.
So it's interesting because as I've been talking about this and thinking about this, I have rarely have ever had a CPA proactively say to me, hey, Henry, are you thinking about this? Or I notice you're not deducting that. Or what about your home office expense? Again, and it's partly because of the type of relationship that is and the time of the year in which we engage, which again, as we said at the outset, it's when their heads down. They don't have the time typically to provide that proactive advice, even if they knew how to, right? And so that's the big disconnect. But we've come to kind of accept that that's the way it works. And most small business owners are simply not aware of this other ability to get tax coaching or tax planning advice. That's been my experience.
Right. And that's why I asked the question, when was the last time your accountant or CPA came to you with an idea to save taxes? And I get that blank stare.
So let's segue off of that on how to find the right CPA or tax planner, or maybe you can find someone who's a combination of both like you are. What are some of the things we should look for, ask for in finding that person, or identifying that we need two people?
What kind of groups they are part of, how much continuing education they undergo, how often. There's a couple of different groups out there. There's probably well over 500 members of the group that I'm part of, and of those 500, there's probably less than 50 that are doing it very actively. So you really want to see what kind of continuing education are you doing? How often are you doing it? What are your clients saying? Can I have referrals, references? And what kind of guarantees do you offer? And we offer an actual 100% money back guarantee on a tax plan. If you're not completely satisfied, we'll just refund you your money.
I would think I'd want to also ask about how they're going to engage with me. What's the process? And if what I hear is, well, and in January you'll get me your books and we'll prepare the returns, then that gives me one indication, as opposed to what I probably would hear from you, or I know I would hear from you, which is We're going to put together a tax plan. We're going to talk at these intervals throughout the year. So just that alone gives me some good insight as to their approach, right?
Oh, definitely, because we'll get calls this time of year, and people, can you do our taxes? And we'll have to explain to them, yes, we can work with you to work on your taxes and some planning at this point, but we'll only work with you if you're going to engage us on an ongoing basis and communicate with us throughout the year, because it's not really fair to our current clients.
So the other mistake I see small business owners make that I'm sure you encounter is that we tend to want to cut our costs up front in particular. So it goes back to, for example, entity choice. We're trying to start our businesses in really tight budgets, and so we look at spending money with professionals like a tax advisor or a CPA or as an attorney. We try to minimize that as much as possible, but I think what happens is then we end up cutting that corner and we never do get that advice up front. Do you see that a lot with small business owners?
Yes. I mean, it's kind of like, what is it, tripping over dollars to save pennies, is that saying? So you see that a lot, and you can understand, a lot of times people are bootstrapping a new business and funds are really, tight, and they have to make some key decisions. But that's why we like to show them like a return. What's your return on investment going to be in year one?
Yeah, so they can look at it as an investment more so than an expense.
Exactly, because if their stockbroker called them up and said, listen, give me X amount of dollars and I'll triple it for you, guaranteed. Yep, they give them money.
All right, we'll take a personal turn here, Craig. I'd like to ask you, if you think back to a decision you've made in your life that you now realize has had significant impact on your business and your personal life. So if you think back to a decision you made, what would that be?
Oh, there were so many of them, but I would say the most recent was when we decided to really fully pursue tax planning in our practice and focus on that, making that be the core part of what we do and how we communicate with our clients.
Yeah, that's completely changed your business.
Tremendously changed it. It's been great for our clients. We've been able to grow a great staff. So that was a big decision.
What do you love most about what you do today?
Oh, I just love being able to sit down with somebody and, save them money that they can use, whether it's to, send their kids to a special school, go on vacation, buy those shoes you want to buy, take care of mom and dad, put more money away, just having, the client being able to really be proactive and get a real benefit of it. For me, I love this.
All right, so summarize for us, if you would, give us the elevator pitch on your company, and then I think you also have a free promotion for us, or a free book offer, if I'm not mistaken. So tell us about the business and then about the book offer.
Sure. Okay. It's my firm is Craig, Cody and Company. Our website is craigcodyandcompany.com. What the main thing we do is we help clients keep more of what they make, and from there we go into your typical tax and accounting. We have a little bit of a niche in international clients, and we do a fast-growing outsourced CFO services. So that's about us. There's 10 of us here. Just hired my 10th employee yesterday, and we're all client-centric. So that's about us, but it's really about helping you keep more of what you make. So I'd also like to offer everybody the opportunity to get a free copy of my most recent book, which is called The 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. There will be a link on Henry's site that will take you there, and you could fill out a little opt-in box with your name and address, and we will send that book out to you.
Fantastic. That's a great offer, and we'll have a link to that, as Craig alluded to, on the show notes page for this episode, to be sure to get that. I think that's what I'm recommending to my clients on this whole topic of creative but legal and moral and ethical ways to save on taxes. The first step is to begin to educate yourself on these things that people are practicing on a daily basis, and just educate yourself. That allows you then to go ask those questions of your current professionals and help you decide if you need a different professional, right? So that's where I recommend people start. And so a free book like this is a fantastic opportunity to get started down that path. So thanks for that offer, Craig.
Very welcome.
But speaking of books, besides your books, is there a book that comes to mind that you would recommend to our listeners?
You know what? I just got into, I'm probably about halfway through a book called View from the Top. It's by Aaron Walker. It's really a book about life. Excellent book. But it's well laced with business things.
Wonderful.
So I would recommend that book.
Great. Thanks for that. We'll have that on the show notes page as well. So let's wrap it up. Last, final, parting piece of advice or thought for our listeners, Craig.
Just remember to be proactive. Go to your accountant and communicate with him. And remember that you do want to keep more of what you make. And, if Donald Trump and Warren Buffett can do it, so can you.
Fantastic. And tell us again where you would like our listeners to go to find out more about you and your CPA firm.
Okay. It's CraigCodyandCompany.com. And there will be a specific landing page that we will note, which will be on Henry's page. And it'll take you right to where our book link is.
Wonderful. Craig, thanks for taking the time to be with us today and for sharing all this knowledge. We appreciate it.
Thank you very much for having me.
This is Henry Lopez. You've been listening to another episode of The How of Business. If you're listening to us on iTunes or Stitcher, we would welcome and thank you for subscribing to our show. We look forward to having you join us on the next episode of The How of Business.
Thank you for listening to The How of Business with David Begin and Henry Lopez. We hope you found practical ideas to help you start, manage, and grow your business. If you enjoyed this podcast, leave a comment on iTunes and go by LevanteBusinessGroup.com and learn more about Levante's resources to help you with your small business. Until next time, thanks for listening and go live your dream.